thanks for joining us, and thanks for having lunch with us today. I know that time is often difficult to find. I'm Angela McDonald. I'm the Managing Director of Optimum Recoveries. We're a business that helps businesses stay in business through the application of savvy techniques in regard to debt prevention, management and recovery, all really important things for the time of our climate and environment. Part of our overall mission, as I said, is to help businesses stay in business, and the world has changed dramatically over the last 3 years thanks to COVID. We've all done a great job of pivoting with the best of them. We probably seem a bit like ballerinas at times, but in 2022, how do we ensure that we still have the energy and drive to stay on top of things? Navigating with your numbers will help you secure that position, and that's why we're here today. Our numbers always tell a story, and according to Creditor Watch, which is a bureau that we often tap into for fresh monthly data in their business risk index, they released their data last week. And one of the things that they came out with, I'll read this to you. Omicron bit the economy hard and smashed the optimistic expectations of thousands of small and medium enterprises. Isn't that an awesome way to start the year? So that's what we're faced with right now. Some of their stats included trade receivables, so sales, in the decline at the moment, and they're down 50% overall for all of the different industry sectors that they manage and monitor, by 50% on pre-COVID levels. The probability of a default on payment, so a customer not paying you on time when an invoice is due, over the next 12 months will hit key industries including accommodation and food, which isn't a surprise. Information, media and technology, which probably did surprise me given how reliant we are on it right now. And of course, construction has been heavily hit as well. The number of payment defaults, debt-related court actions and insolvencies is extremely elevated right now as well. Court actions had increased by a whopping 58% on pre-COVID levels. And there's some reasons for that, which we might tap into as the conversation goes on today. So navigating with our numbers to keep businesses on a course is a must right now. To help us set our course, I'm really pleased to be joined by Brad Bulow today. Brad is the director of Brad Bulow Bennett, or SBB Partners. And as a director and CPA of SBB, Brad's the driving force in their expansion of service and delivery. He has an eye for opportunity, an entrepreneurial spirit, and has seen SBB evolve from an accounting firm to a full-scale wealth creation provider and an Australian Financial Review top 50 Australian firm. He uses his experience as an accountant to help businesses at any stage of their life cycle to adapt to new markets, grow and increase their value. And today, Brad's going to talk to us and talk with us through numbers that we should be looking at now to ensure a really solid 2022 and beyond. Before I hand over to Brad, we are keen that today's session covers what you want to know about. And the first part of our talk does focus on questions that were sent in by people as they registered for our session today. So thank you for doing that. We've left a good bit of time at the end of the session. So if you do come up with a question, please add it to the chat box and we will cover that as we go along today, or circle back to it at the end where we've left a good bit of time. Our lawyers say we have to say it, so keep in mind that the information that we provide today is general in nature and not specific advice. So welcome, Brad. We're really looking forward to helping us set our course.
Thank you, Ange, for that glowing endorsement and introduction. Look forward to sharing some insights of mine and answering any questions you have today as well, people.
Awesome. All right, well, let's start with this one that came in. People want to know how they can confidently take control of their business right now, given the current climate. How should they do that? What's your advice?
There's many things, Ange, but I will steal a phrase of my business associate, Brendan Forward. There are the 4 Ps, which we've sort of narrowed it down in terms of trying to streamline the advice we give to clients. Purpose, prospects, people and profit. Purpose, I come down to, well, why are you in business? What is your mission? What is your vision? What are you doing different to your competitors? You just don't want to be another run-of-the-mill business. You've got to have a point of difference. You've got to have a repeatable, scalable product. You've got to be in business with something that's not generic. The people, I'm a massive advocate of this. People are your biggest assets. Often sort of would like to recognise people more, not as an expensive business, but a balance sheet item, an actual asset that you can leverage and reap financial rewards from your business as well. Getting the right people mix, having the right behavioural profiles, having people sit in the right seats, having roles that are crafted to suit the people, that will make your business a better business. Prospecting is very important. You've got to have a target market. You've got to sort of understand in business. I sort of talk about this as you got to know who your jam clients are, your clients that you want to attract, the clients that are the most profitable clients, the clients that you get great reward financially and internally in working on them. What's your low-hanging fruit? What's the clients that you can just keep coming in year on year? You can keep things ticking over and help the cash flow. And also, what's your high-hanging fruit? Who are the clients you're striving to achieve to your business? Who you're trying to attract as well? So, prospecting is important. You just can't sit idle in this day and age. It is the world of web as well. So, having an online presence, I believe, is vitally important. But at the end of the day, we're in business to make a profit. So, to do that, you've got to understand, well, what is the definition of a profit? Profit isn't making $1 million of sales for the month. Profit, some of our best clients might only, but might turn over $500,000 in turnover a year, but their EBIT, the net profit percentage is 50%. So they might keep $250,000 of that $500,000 profit. We have clients who turn over $30-40 million a year, but break even every year. I know which business I'd rather, and I know which business would be more stressful as well. So I think having a view to profit, what profit is to you, what profit is to your business, and at the end of the day, like I said, you just don't want to go into business. I think it's something we'll talk about a little bit later in terms of some of the questions I've seen beforehand. We don't go into business to break even. There's a lot of stress in running a business. There's a lot of discretionary effort in running a business. We go into business to make a return on investment as well. So got to have a view to make a profit, not just to survive, I believe, to thrive in this economy we face today.
Absolutely. Great. All right. So you talked about purpose and having goals and knowing where you're headed. So how do we set those meaningful goals and use our numbers to drive our business for those best results, to make sure that we are the company with the profit as opposed to the one breaking even?
First of all, Ange, employ a great debt manager and a great accountant. We've got two speaking to everyone today, so there we go. But in reality, you've got to know your key drivers of your business. I know we'll touch on it a bit later. You've got to know your key performance indicators, your key drivers, which dictates how your business is going. Like I said, no good having a business that's profitable if cash flow is poor as well. I think it's really important to compare your business. There's so many reports, benchmarking reports, there's IBIS reports as well. Know your benchmarks. Know what your competitors are doing and try to do better than them. Be eyes wide open with your business. Know what costs, know what your overheads will be, know and understand what they are as well, because they are real costs to your business as well. A lot of our clients, I sort of encourage to leverage. They can do this through Xero or MyOb, or there's other software as well. When you do a job, understand what that job costs you. It's not knowing a job, you're charging out $10,000 and you've got $9,000 worth of labour, so I'm making $1,000 on that job. That's not reality. When I'm talking to a lot of my clients and often in the trade sector as well, numbers are friction points for a lot of clients. They don't understand it and it overawes them. But there's a furphy that, okay, well, it cost me $9,000 in labour, I charge $10,000, I make $1,000. Well, that's not technically correct as well, because there's a lot of hidden costs in the business. You've got to understand what your overhead. Sorry, Ange. Sorry,
Brad. If you're talking about that trade sector, I've heard a lot of our clients feedback that the cost of materials, while they might have been great on their quoting before, the cost of materials has skyrocketed. So
it definitely has. Definitely has, Ange. And that has really happened sort of overnight as well. So yeah, businesses do have to pivot. Some costs you will have to absorb, but I think that's why when you're pricing a job, you've got to know what your overheads are, your business. Each week, what's it cost you to keep the power on? What's your insurances costing you? What's your marketing campaign? What's your marketing costing you? What's your rent? you've got to absorb those costs in your business and your pricing as well. And often I find businesses just don't know why there's no money at the end of the day, but it's often because they haven't factored those costs into their business as well. You've got to monitor. So every business should have a cash flow or a budget or a forecast as well. And there's no use having these budgets unless you're actually checking in and reviewing them as well to compare your actual with your budgets and understand why there's variances as well. Have we got complacent with our pricing? Have we had a lot of leave in that last month where we didn't budget for it? Are there seasonal fluctuations which we didn't factor in as well? It's just regular monitoring. It's also in your own business having real-time access to numbers as well. Don't just wait till the end of the month. Don't wait till the end of the quarter to get your numbers up to date, because sometimes that's too slow. That's too late.
You talked about benchmarking. So where would we get that benchmarking data? I've seen on the ATO portal that I can have a look at benchmarking info, but I've got to give a lot of info about myself.
And I suppose, the ATO do have information on most industries as well. That's obviously, that data has been leveraged by what tax return data has been lodged with the ATO. IBIS is a great program we've used in our business as well. FMRC benchmarking. There's a lot of software. There's a lot of data out there. I don't proclaim this to be the go-to for information, but sometimes Googling an industry or something you're interested in is a way to leverage that sort of information as well. But I think just ring around, ask your competitors, do your research, talk to your accountants, talk to your advisors, talk to your banks. Just talk to these people. And it's okay to have benchmarks, it's also okay to have targets, but try to beat them as well. Because as you said, Ange, steel prices, timber prices, all these costs can move at any time. You just got to have some fat in your numbers.
Excellent. All right. I know that you've touched on it a little bit earlier, but communicating with your teams about your numbers, you're big on sharing numbers?
Definitely are, Ange. I think you got to bring your people on the journey. We, as an accounting practice, obviously we are accountants, so a lot of our conversations are around numbers, whether it be our clients' numbers or our internal numbers as well. So our staff understand from their perspective if they're going to get a pay rise or they're going to meet a par performance. Well, what are those billing multiples they've got to meet? So you've got to share that information, I believe. You've got to bring your people on the journey. Don't hide the data. I think it's important to confuse your people with every cost line item in your business as well, but give them a couple of non-negotiables that they've got to focus on, whether it be a top line number or a bottom line number, and let them know how they're going. I think feedback is very important, and it's important as a business owner to ensure yourself against not feeling like you're on your own as well.
Okay, thanks, Brad. One of the questions that came in earlier sort of crosses over a little bit. So you talked about Xero and MyOb and other programs that people might use around the dashboards. There's a lot of good information there. But what would be the KPIs you would suggest that people look at to make sure that their business is on track?
Definitely debtor days, Ange. They're vital. And I'll just speak from experience. A lot of my experiences have originated from my own business as well. Us as a business, I suppose the key drivers that we have in our business, our largest cost is wages. So for us as a business, monitoring what our wages costs are as a percentage of turnover is very important. To do that, obviously, you've got to know what your overheads over turnover as well are. Look, for our business, well, from a cash flow perspective, this is any industry. I think your debtor days, I have a joke about it, Ange, because I know you are, that is your area, but it is very important, in particular for our business, to understand how much of your, I suppose, money is locked up, how much of it is locked up in your accounts receivable. We also use the terminology work in progress as well. At the end of the day, there's no use us having 50 jobs that are open and not closed off or not finished an invoice to a client as well. It's not great from a client experience, and that their work's not getting completed. It's also not good for a cash flow for a business like ours from a cash flow perspective as well. So I sort of From a cash flow perspective, those sort of liquidity ratios are very important. The asset test, the current ratio, which is sort of current assets over current liabilities. If your cash at bank, your accounts receivable and your inventories are less than your debt commitments, whether it be what you owe the ATO, what you owe your trade creditors, what you owe in employee entitlements, you're possibly going to be in trouble, and you possibly need to secure some funding or an investor in your business to shore those numbers up. So it is very dependent industry by industry to industry, and it's very important not to be, I suppose, overawed with all these KPIs, targets, percentages as well, but it's important to understand, well, what are the three key drivers to your business? So we as a business, like I said, our largest cost is our wages, so we need to know and what our wages over turnover are. Liquidity is very important to any business, and our business in particular, so we need to know, our debtor days is important as well. That sort of information we sort of share in team meetings as well, and try to improve all the time. And any in business, whether you're manufacturing or whether you're working professional services, that sort of work in progress, lock-up days is very important as well. But I think at the end of the day, you also want to know, it does come down to your, as I said to you before, and your bottom line. All these numbers you can have all these KPIs, all these percentages, all these targets, but at the end of the day, you go into business to make a profit as well. So I think ultimately the end game is, well, what's my EBIT, or what's my profit before interest, tax. I think depreciation is the real cost of business, so I don't like adding those depreciation back as a number as well. But what is that EBIT number? What is that percentage at the end of the day? Because that's what you need to make to get a return on your business and to pay that dividend or to secure that bonus.
So on your dashboard, in whatever program you choose, what images, what three things would you expect people to have their eye on all of the time? A little bit like, we're navigating in our car, we're navigating our numbers.
Yep.
We're watching our speed, we're looking at our petrol. What are our three things that are on the dashboard?
For mine is my blood pressure, cholesterol. No, sorry, Ange, they're the medical KPIs. But I suppose for any business, there's got to be a top line focus, because good unless the work is coming into the business. So I think you always got to look at what your sales trends are. They're very important. As I mentioned before, and I've sort of sat on boards, whether it be a Leeds Club board or a Turf Club board, and it is wages in all these businesses are our biggest expense. So what is our wages over turnover? What is our cost of goods as a turnover percentage as well? So that's your gross profit margin. But ultimately as well, what's your EBIT, what's your bottom line as well? So I sort of think, what's your gross profit margin, how your sales are trending, what your wages are over turnover, and what your bottom line results are. If you can keep tracking those and sort of understand and read the game, don't be reactionary, be proactive as well. If you can understand where those measurements are going, I think you're giving yourself every chance to succeed.
Do you think for business right now that unused leave is a bit of a risk, because people aren't taking holidays, they can't go away, unless you've got kids and you've been stuck at home with them while they've been on extended school holidays.
Yeah.
But do you think that that's a bit of a blind spot for some businesses?
Definitely is. And I often see a set of accounts and I don't see that provisioning in the accounts as well. But it is vital, and it is vital for a business to manage that and to have some governance around what leave people can accrue and can be entitled to as well. And I think it also comes down to people are accruing a lot of leave too. And are they turning up to work at their best? Are they in the right state to perform as well? Because you tell me this day and age, especially if you've got family and hobbies and the downtime that you're required to be at your best, how can you live off two weeks holiday a year? Or you need that time as well. I think to be your best, you need to have a freer mind, and you take that leave when it's entitled to you as well. But it is a real cost of business, Ange. It is a real liability on a balance sheet, and it does need to be managed, because if three people want to have a break at the same time, and they want to take that, at the moment no one can go anywhere, but those borders open and those international airports are free flowing, people want to have that extended break. Or can you afford to pay people that leave?
I think from an insolvency perspective, payment of staff entitlements is an area that the ATO and ASIC have been looking at closely. when companies have gone into liquidation, it's very sad to see that people's superannuation hasn't been actually paid. People are comfortable because they can see it on their payslip, but it's not actually been paid into their fund.
Definitely. And I think if any business that thinks they can step around that commitment and responsibility, well, you can't with super streaming and single touch payroll. And at the end of the day, if you are struggling to meet those type of commitments, well, you really got to start speaking to your advisor, speaking to your accountant and going, what's going wrong with my business? Because fundamentally, you're nothing without your people and you don't want to shortchange them. But like I said, I just don't think businesses are going to survive in this day and age with the amount of reporting and data matching available and having those type of accrued entitlements and not paying them.
I agree. All right. Any other KPIs that you want to add in there?
I sort of, one that I do like, and I think this is just in people, whether it's your bigger business life or your investment life as well, as your return on assets as well. So what return am I getting on my assets? I know we look at, commercial property and, I know that as a market it's very hard to get those returns that we used to crave, but it used to be, commercial property should be getting an 8 to 9% return on investment. Residential property, you might be getting a 5.5% return on investment. We should be no different with respect to our business as well. So what assets have we got employed in our business and what return are we making on them? So I think the return on assets is a very important number. I really think though, and without complicating situations, I really think that liquidity ratio is vital for any business and understanding also what that net operating cash flow is as well. So cash is king, liquidity is king. If you've got no cash, you can't pay those bonuses to your staff that deserve it. You can't invest in that marketing campaign that will bring in a heap of business. You can't invest in that human resource professional that you really know you need to galvanise your business. I think liquidity, cash flow, current ratios are probably is as vital as ever in this day and age.
Awesome. All right. Thanks, Brad. Next question from our people was, how do you measure staff performance and give them the direction and clarity? Because, several points throughout the discussion so far, you've mentioned, your team. It's all about your team to be able to deliver on your service promise and get things done and out on time. So how do you measure staff performance, give them direction and clarity and some of those rewards that you were talking about?
And once again, it depends on, I suppose, your industry and the type of person you're employing as well. A lot of people like a lot of data and a lot of feedback and a job description that might be 5 pages and comprehensive. But I know some people just, simply a list of what your non-negotiables are and your negotiables are. That's all they need, and they'll go out and do that. But I think it's always, you've got to bring it back to some sort of measurement as well, because I think staff are craving in this day and age clarity. So have a clear job description, have clear targets, so that when it does come time to sort of doing a performance review or doing a pay review, you've got something to measure it by. And I don't believe leaving check-ins or conversations with your staff till the end of a 6-month period or end of a year is good enough in this day and age as well. Regular check-ins, transparency, open communication, and let your team member tell you what they can do as well. Don't shortchange them in terms of what you think they can do. Let them tell you what they want. If they want to be a manager in 12 months' time, and we want to keep that individual, we've got to find a way to become a manager and grow the business and build scale. So I just think breaking the barriers, building those conversations with your team, building, I heard this term yesterday, vulnerable trust is important as well. So breaking down with your team members where they think their blind spots are, where they think they're weaker, but what they think they can do well is important as well. So I think it's just about having those open communication channels, but having that clarity, having that clear expectation, and so that it's no surprise, it's no shock when you, as an employer, might have a bad day and give feedback that the employee mightn't have expected. Well, that shouldn't be the case. It should be pretty clear and pretty understandable at both ends what you expect from that person. But I always think, like I said, at the end of the day, our staff pretty much know what's a good performance, and they're knocking on our door before we're knocking on theirs. Ultimately, they know when they're ready for a pay rise because they know they've done the 3 things that they had to do.
Yeah, I mean, you're a firm that's grown from a very small firm to quite a large firm, and I don't know if you know this, but I know some of your people that work in there with you, And I know that you do team member surveys, and you walk the talk in terms of what they're suggesting. Yeah. And you do listen to them in terms of that role crafting and clarity. But how regularly, aside from the surveys, do you meet with them?
I probably, and this is and I don't know for all you people out there, and feel free to contact me if you're interested in doing one of these exercises. We've done a lot of behavioural profiling with our staff, and it's become a bit of code and a bit of a language in our organisation as well. And this is the whole DISC, dominant, influencer, steady, compliance people. So we sort of know the people who are in our organisations, how they're wired. I've often been told that the 20% of S in my behavioural profile is a 20% that gives me blood pressure, because I do care about people, and I am having an open door policy all the time as well, which I don't think is something that is always encouraged, because you do need the time to focus, and having an open door policy can give the wrong impression to your staff as well. But I think it's really just important to know your people. Some people you just give one or two bits of feedback here and there, and that's all they need, and then off they run. Some people will like that longer conversation, to feel they're part of a team, that you've got their back. So you spend more time and invest in longer conversation with those people. Some people like things that's very factual, very accurate feedback. So you wire your conversation differently with those people as well. So for me, it's important. I think it's important for your staff to grow. It's important for your staff to feel they got that warmth and that support as well. But we do surveys, as you touched on, Ange, but it's important to share that feedback with your people as well, and not just do a survey for the. And at the end of the day, we do live in a world of tick that box, we've done that. That's not good enough. You've got to give the staff the feedback. You've got to be. And our feedback in our last survey was reward and recognition programs, and that's probably everyone. It probably leaves us vulnerable as an organisation to go, well, okay, the staff have come back and said reward and recognition programs or align the teams as something that they want. Now we've got to deliver on that, and I suppose show the team that we're on that journey. But at the end of the day, if everyone knows that we're care for our people, but we do obviously we're all aligned to making a larger profit for our organisation, which means we can pay people more money, and people understand, well, that's what the strategic objective of a company is. Yeah. Well, then you'll have their back and their support. So you've circled back to sharing your data again. Definitely, it's just sharing your data, and I have heard, and we're sort of going through performance reviews at the moment with our people, and more is better. In the past, I've probably shielded people because you think, well, they don't need that pressure or they don't need that feedback, but people want that feedback. They want to know how they're going. And at the end of the day, because everyone who's going to work they're all running their own little business or their own little hub. And I always tell my staff that you are running your own business. Yeah. Every day is an opportunity to turn up and create something different, create something new, and to kick goals. Yeah, great. Thank you for that, Brad. Let's circle back to our navigating numbers. Can we just talk about, you touched on it before, breaking even. So we've got lots of different types of businesses online today. Some are quite mature businesses, some are newer businesses. But if any of them, as a result of the past 3 years or 2 and a bit years of COVID, at a stage where they've gone from making profits to now just breaking even, what can they do to fix it? And what can they do now? Once again, it is very important, as you said, Ange, to know your break-even point in business. Like I said, I like to have a stretch target, and it's a break-even point plus enough to pay a dividend or pay a profit share. But a lot of businesses don't have that luxury at the moment because, like I said, there's been a lot of unforeseen costs in their business or a lot of price pressure on what they can get away with in terms of charging a client or winning work as well. Or staffing issues as a result of COVID, moratoriums, forced closures. Definitely loss of, and a lot of businesses that work in, like I said, in the hospitality or retail sector, their businesses have just gone. They've had to redefine what they do as a business as well. So it is very important to know your break-even point, but it's also important to know that you've got to pivot and change sometimes as well, because maybe your product or your service has become stale, has become redundant, it hasn't been tweaked for a while. So maybe you've got to look at your product mix Maybe you got to look at your sales mix. Maybe you got to look at, like I said, your client mix and go, well, maybe this client's a great client, but have I changed my fee in the last 10 years with them? Have I, has there been a CPI increase? Has there been a market review? What resources am I throwing at completing that job? Because every year our costs get more, but I think often we don't look at, we just sort of, if we charge the same as last year, that's good enough. Well, it isn't. It isn't, because everything's getting more expensive. So I think you've really, in terms of breaking even, this is more a personal belief, but I think you've got to look at all levels. You've got to look at, well, maybe there's some costs that we can that are excessive that we don't need. Maybe I can get better bang for buck for a different phone company or through a different power provider. But I think as soon as you start cutting costs out of your budget, staff start seeing in the office that those six-pack of beers not in the fridge at the end of the week, or the once a month free lunch isn't there. Staff can get discontent by that. Perception might be that, no, these guys are going, their business isn't going real well. They don't care about their employees anymore, and no one wants to be part of a sinking ship, do they? No. So I think really, and possibly it's like playing sport. You've got teams that are aggressive, those that are defensive. I think you've got to blend both. You've got to not be stupid about your costs, and there are some redundant. You've got to look at your business and go, well, why are we paying that subscription, or why are we outsourcing that IT provider? But I think getting the revenue, being relevant in your business, being aligned to your strategic plan, and adapting where you need to is as important as cutting costs.
I've heard you talk about this in the past, and that is being really close to your clients and understanding which of your clients are profitable or not. And I've heard you touch on clients who don't have regard for you or really understand the efforts that you put in, and that sometimes the best thing that you can do in those situations is to let them go.
Definitely something I've really struggled on my personality, and I want to help everyone, but that's not always, I'm not going to trying to win the AFR Pro Bono Award again this year, but I think it is important for it's not just for yourself. You've got to have your own personal values and your firm values, but often it's your people in your organisation as well, because it affects everyone when you sort of take on that client that wants everything at the drop of a hat but won't pay the bill in 90 days. Yeah. So I think it's taken me a lot of time to come to grip with this, because my attitude is to help everyone, and everyone deserves your time. But we all only get so many hours in the day. There's no use. We've all got to exercise. We've all got to spend time with our family. We've all got to, have me time. Why jeopardize that by spending those extra hours on that client that you just keep losing on every year? They won't budge on their price. They don't value what they do. Why spend life putting up with that? I suppose, and we just got to all value our time, and I suppose, and align your business to the type of client that you want to work for. And it is very hard to say no, but we've all got to be better at it.
I think Saatchi, the global advertising agency, they wrote a book, and they talked about the decision that they had to make, because they had British Airways as a client, and it had been a long-standing client, but they were painful. They wanted everything for nothing. They were disorganized. They were a bit precious and pretentious, and they made the decision to cut them loose. And the amount of time that their people could then invest in developing other relationships made their next year more and more profitable. And a little over 12 months later, BA wanted to come back to them because they realised how much they missed them and what they did in terms of adding value to their business.
Yeah.
So, yeah, that was something I picked up from what you said a little while ago. So don't be afraid to say no sometimes. Definitely.
Very hard to, but it's not just affecting you, it's affecting your whole team by putting up with such behaviours.
That's it. All right. So we've got our breaking even, how to fix it and turn around, but what other problems might be at play if your straight up cutting costs isn't working? What else should we think about as business owners?
Yeah. And it's a really good point. And like I said, we all need to look at our cost line items regularly to work out, to stay on top of things. I'm the king of subscriptions. I love a new gadget. And I think everyone is listening may understand the whole language of chart of accounts. Us as an accounting practice had our subscriptions account, I think, went down to about 50 because I do love a gadget. I do love something new and flash. But so obviously there are always costs that you can get rid of in the business. There are always costs that you can renegotiate, see if there's better providers out there, see if there's a way to automate something as opposed to paying for something. But I think it's really, really important to understand when you are cost cutting, what's the perception internally to doing that from a staffing perspective, but also externally as well. Because I know as an accounting practice, we've got 40 people working at our Ipswich office, all very involved in the community, all very in their own universes, respected and prominent people. When they start, and they don't mean to, but if they are at a barbecue and they start talking about, we're not getting our Christmas gift this year, or we're not doing it in a financial year party, the perception of that and the fallout of that is, then clients start feeling that, okay, what's going on there at that practice, and that creates an element of doubt and concern. So, and I also worry about at times the type of costs that you do cut. If you do stop doing your marketing, you give up, you don't pay that person to do your social media posts, you remove that person who might not be a billable person, like the HR professional, for instance, you get rid of them as well. But you gotta also, when you remove costs, understand, well, how is that going to affect the top line as well? So I think it's being strategic about where you're cost cutting. I think it's a dangerous precedent to cut costs. I think you also got to look at the same time as cutting costs, do we just increase our prices? Do we bring on that other product that we've been sort of investigating or prototyping? I think it's as much as, if profits are shrinking, not just looking at at your expenses in your business, but it's also looking at the income side of your business. What is our growth strategy? How are we, is our word of mouth referral program working? Is our website relevant? Does our branding need reshaping? Do we need to look at what our key pillars or our key services are in our business? So I think you've got to look at the whole. Cutting costs can be good, but you've just got to be concerned about the message it gives.
Some beautiful things can come out of pain points. You think about a bit of grit in a pearl, or in an oyster that with pressure and agitation becomes something fabulous. Same with a diamond. So I guess we've seen a lot of innovation come out of these more challenging times. One of our clients is a gin distillery. They pivoted. They're now making hand sanitizers and that type of thing. So that innovation, that little piece of spark caused by pressure or pain, it's amazing. Have you seen that with any of your clients where they've?
No, I've seen a lot of clients pivot and change their business models. Obviously, when COVID first hit, one of my dear friends who owned a pub turned to takeaways, and and really, really did well out of that. Just make sure your distillery client is also claiming all their R&D concessions too, and so that might be something missing. So you got to know what is available when it comes to grants and free money, I suppose. But I've seen a lot of clients pivot, because in this day and age too, it's very hard. The labour market is tough. Even us as an accountancy practice, it's very hard for us to attract client at a more senior level. So we've had to reinvest back in our youth and sort of start a cadetship program. So we're sort of talking to a lot of the schools and picking the best commerce school students or accounting students in grade 12 and bringing them on the journey as well. So you've got to sort of you got to adapt, you've got to be agile, and you've got to have people in your business so you can turn to sort of, for that bit of inspiration, go, well, what do we do now? You can't, following the bouncing ball or what you did last year is not always going to give you success.
That's awesome. I think that's probably maybe a good point to step off on and invite our people who are online to have a chat and talk about any other questions they might like to raise today, or stories that they might like to share of things that they have had to do over this challenging period or looking to do moving forward. Would anybody like to join in? I've lost my chat bar, Beck, so you might be able to help me with this.
I've probably got something to touch on. I've been working with a couple of clients. I've just gone out on my own doing virtual CFO work or contract CFO work. And I think the critical thing I've found working with a few people in really tough, ATO situations is that I think Brad touched on it, the back to basics, getting them to really understand the week-to-week cash flow, how that relates to cost of goods and overhead expenditure, and just really settling the business down, because sometimes in these situations, and this is where accountants or consultants can kind of help in that financial area, stabilize if there's panic around who you pay first, so that you can, because a lot of the time you can navigate people out of those situations. You've just got to really understand what's going to keep the business going and what's going to keep the creditors and the ATO happy, and is the business sustainable from a profit point of view going forward, and making that assessment really quickly for the client so they can navigate it best. And it's getting that simply understood first without too much complexity around KPIs.
Yeah, thanks, Gavin. We heard that the ATO is starting to share their default data for anybody who is not communicating with them or making arrangements in regard to payment of their taxes. So what you were talking about was right on point. They released a bit of a hit list, and this might be one for Brad and you, Gavin, from time to time, of industries and sectors that they are focusing on. Who's in the site at the moment?
I'll just touch on that too, Gavin. Yeah, very prudent points, mate. Some of my, it's not saying best clients or most successful clients or most aggressive clients, but some of my better clients, more profitable clients, it's surprising they do have an ATO debt, because when you're growing a business, you obviously your funding, your debtors get higher, and your working capital needs become larger as well. So that's where it comes down to being very circumspect and detailed with respect to your forecasting, know what's ahead, know what your funding gap is going to be as well. So great point, Gab, but I think it's all comes down to, again, planning and budgeting as well, and knowing, well, okay, why, and then understand why or when I'm going to have that ATO debt. Well, and as you said, Ange, just communicating with the ATO. They're, at the end of the day, they can be aggressive, they can, plan, they can plan to shut you down, but that's generally over a long period as well. And I suppose just show a community that you want to deal with that problem, and then you can work with the ATO as well. And in terms of the old chestnuts, and it all comes down to benchmarking and stuff as well. Obviously, always the ATO economy, the ATO looking at, but also the building construction industry seem to get a bit of a look at as well. And probably are feeling it from everywhere as well as the ATO, the QBCC as well, are being very stringent and very aggressive in terms of receiving financial reporting data as well, due to builders collapses and stuff as well, which has left a lot of subcontractors in the past unpaid. And the building construction industry is always one that's being targeted, but every industry is being targeted if they're sort of falling outside the norm and not, I suppose, complying with what benchmarks the ATO expect.
Yeah. We've got Michael Blanc. Michael from Blanc Consulting. He wants to ask a question or share something, Michael?
Yes, thanks, Angela. Can you hear me?
Yes.
Yeah, good. So I've written a bit on payment terms just in the comments there in the chat. I have a very strong experience that there is a direct connection between setting payment terms and cash flow. And a lot of businesses, when they put on a customer, they say, here are our payment terms. They might be 7, 14, 21, 30, 60, whatever they might be. Then that creates an expectation the customer is going to pay within that time frame. The bit that's missing is the discussion with the customer to say, okay, if we're selling you goods and you're on selling them to someone else, and then there's an expectation in terms of what that process looks like, that might take 53 days, but it means that your client will pay you every 53 days without fault, and your terms might be 30 days. And that's often seen as someone who's paying late. And yes, people who eventually, end up in bad debt, yes, they start to pay slowly or whatever else, but there is a lot of good commercial transactions to be had within the time frame of paying between 0 and up to 60 days. And quite often that's missed because people say, well, our terms are 30, our business is structured to get the cash on 30, and we struggle with cash if we don't. If you get it every 57 days or 53 days like a Swiss watch and it's good margin, it's good business.
Yeah, and I think you've touched on it there. It's good margin, and you've got to think about where we're getting our money. There's a lot of people who are doing invoice funding, invoice financing, and that type of thing, and they can get caught in that gap of when the payment's expected and when the payment's received. So that ties in with what Brad was talking about, and really knowing your numbers and knowing the cost of production and sale. What's everybody's thought about offering discounts for early payment? I've noticed a few of our clients are starting to do that. Would anybody like to share some thoughts there?
I'd probably just, I'll put my video back on. I'd probably just put caution around that and really understanding around how that's going to impact the gross margin of your job and the client's job, because sometimes that can be take away a lot of the profitability. So I would proceed with caution around that discounting side. Obviously, if it's built in and you can absorb it and it helps fund the business, then do it. But yeah, sometimes I've seen it where it can actually really hit the profitability hard.
Yes. Yeah.
And I sort of agree, Andrew. I think in a economy where everything is tight, there's so much pressure and competition and trying to make a profit, discounting things can hurt. But I think if you plan with your cash flow, you've got a war chest, or you've spoken to your funders or your investors, or maybe you don't need to offer a discount because you can ride out those cash flow bumps.
Excellent. All right. Thank you. We touched at the beginning of the presentation around sorry, someone just popped up a question. We touched at the beginning around the increase in litigation relating to debt collection, and we're 58% more in that regard than same time last year and the year prior. So we've got Craig Mason on today. Craig is from SMS Law. Craig is a commercial litigation lawyer. You there, Craig? Craig's loving me for throwing.
Yeah, I'm here.
You and I have lots of conversations around prevention and protections being better than cure. If we're looking at new customers to take on board, and we might be looking at our own protections and security right now, what should everybody consider popping into their credit app's terms and conditions that would help them to have those controls in place and protect themselves? It's a little bit off the navigating with numbers piece, but I thought while we've got you, that would be a good thing to share with everybody.
Yeah, thanks, Angela, and apologies for the background noise. I'm at home today, but most important thing is just knowing who you're dealing with when you're taking on a new customer. I think as you go along in business, particularly when you start, you take everyone that knocks on your door or send you an email. And that's not necessarily the best way of doing it. They might be good customers, but you need to do a bit more looking under the hood to make sure that they are. So that could be credit checks to see if they've done that, if they've got a good credit rating, if they haven't paid other people, for instance, you'll be able to see that. And getting all their details, which a lot of people just don't get all their customers' details. They might... I'm dealing with Bob, but Bob's actually a company, or Bob's trustee of a trust, or whatever it might be. So getting all those details, ABN, ACN, of exactly who you're dealing with is vitally important at that point as well. And making sure that you've got terms and conditions that you provide to your customer before you engage with them, because there's no point doing it later because you've already entered into an agreement. You can't then start introducing terms and conditions into something that they didn't agree to at the beginning. So have a comprehensive terms and conditions document with any engagement. And you might not need all the things in there, but if you don't have it, then you'll never be able to use it. So have a comprehensive terms and conditions and just a good process for collecting information and checking out who you're about to deal with.
We've got people in Queensland and New South Wales online with us today, and if we touch on some of those comprehensive terms, one of the ones I like, and it ties in with what Brad was talking about knowing your numbers and being able to pass on some of those costs. There's costs associated with debt collection, whether that be agency fees, solicitors' costs, or court fees, but the rules around that are different between each state. So what do you recommend people have in place to make sure that they can pass on those fees?
Well, have it in there regardless of where you are, so you do have the ability to do it if you need to. And there are ways around the legislation in relation to that. But if you don't have anything in there, then obviously you're never going to be able to actually rely on it. So the whole point of it is to, with interest, admin fees, collection costs, legal fees, it's to put you back in the same spot you would have been if you had have been paid on time. So admin fees relates to you've got someone following up outstanding invoices, etc. There's a cost to that. The interest that you would have had if you had that money and put it in the bank, not that you would get much interest anyway, but you're still compensated in some way if you've got interest clauses in your terms and conditions. The same goes with legal fees and collection costs. So you've had to outlay those. You should be compensated for that like for like. So you're back to what you would have been if you got paid in full at the time. And
again, touching on, Brad's earlier piece about doing secure business, would you think that the PPSR and having registrations on there would be important?
Yeah, if you're in the industries where it's particularly relevant, then yeah, definitely. PPSR is something that is vitally important to allow for that. And in order to do that, you need to make sure that your conditions in your agreement meet the requirements under the Act to be a security agreement, so you can actually register that interest.
Okay. Beck actually just shared a really good tip. Do you want to jump in there, Beck, and let everybody know what that is in case they didn't see it in the chat box?
I was just putting in there that when you were talking about the discounts, so my partner who works in construction, which is one of the industries that does get a lot of their invoices paid quite late, has started doing the discount. They're quite a new business, so they're getting larger cash up front, which is then allowing them to invest in their equipment, which is then allowing them to win larger jobs and make sure that they've got 12 months worth of work in the pipeline, and the cash flow to enable to do that. And so far so good, I guess.
I love that that they had the nous to ask for monies up front, or at least start the conversation, because they've ended up with something that they didn't think or might not have thought possible.
And it's helping them grow and secure more business, because they're reinvesting that back into themselves to help them kind of get a stronger foothold within the industry.
And sometimes you've got to do things to get something moving or get a business off the ground. So it always comes down to the opportunity cost. So the opportunity cost of your husband not doing that job, not building that market credibility, versus the cost of, and what would it cost that 20 grand that he's going to lose in terms of maybe margin on that job? And what would have he ever got that job? Where would that 20 grand, where would that money come from to fund those materials? What cost would have it been a loan shark? He would have had to pay with ridiculous interest rates to fund the acquisition of that material and stuff too. So there's no right or wrong in all this. Every business is different. Like I said, as your partner's business matures and it's got a bankable history which they can show to investors or show to banks, he might not have to resort to giving those discounts. But it's all it's all individualised to everyone's circumstances. So.
Now, we've got just a couple of minutes left together. This is your opportunity to really put Brad in the spotlight, headlights, while he's been navigating.
I reckon there'd be some questions for you too, Ange.
Cool. Are there any questions that you'd like to ask Brad in regard to navigating numbers, key numbers, or his thoughts on something that's happening in the economy right now? I'm not seeing anything pop up in the chat box, but happy for you to unmute yourself and sing out.
I had a question about, I guess, as a business owner, how important is it for us, our personal budget as well as our business budget?
You're phoning a friend there, Beck?
Right, yeah. Always unmute myself, and the second I unmute, my phone
and I've been to a lot of great conferences, and they have been from administrators or forensic accounts. I've seen there's a lot of good businesses that still go broke, and often it's because of the owners, not having their own personal budget, or drawing excessive wages, or massive loan advances from the company. So everything's got to be kept in check. Yeah, we've spoken about business today, and it's important to have a budget. It's important to know when you've got seasonal fluctuations, and when when are quiet months and when are busy months. Same thing as a personal budget. End of the day, if you want to personally borrow money to grow wealth, you got to have a good personal financial history. But at the same time, if you can't make ends meet at a personal front, and you need to borrow, draw more wages from the business and strip its cash flow out of the business, well, the business won't have that war chest or that backbone to survive as well. So they're very correlated. Like I said, there's some people out there who can live on 100 grand a year, and their business might make 200 grand a year. That's great. They get to reinvest 100 grand's profit every year, or work with their accountant and devising a structure to get access to that money tax-free. Or they might have most businesses I've seen that might make 400 or 500 grand a year, but the owner pulls 600 grand out of the business. Well, that's not sustainable. So I think it's very important to have parity. I'd rather a client be conservative with what they draw out of the business in terms of remuneration than checking with their account maybe every quarter or at the end of the year and pay that bonus or top up their income that way. But yeah, so correlated, Beck. It's very important to know your personal budget, to have what you own, personal debits and credits, as much as it is on a business front.
Great. Thanks, Brad. I think we're coming into the end of our time together, but I did want to share with you some things to take away, if you would like. Brad has shared, and please email Brad if you'd like a copy, the A to Z of small business survival, or the survival guide. And from Optimum Recoveries, if you'd like to receive a copy, we have a debt collection manual, which is a little like a car manual, which talks about all of the things that you need to look at when considering taking on a new customer, managing a customer relationship, and or pursuing a collection if you need be. This session doesn't necessarily seem like a good fit with what you'd receive as advice from your debt collectors about how to navigate your numbers and the like, and that's what we aim to do. We're, as I said earlier, trying to help businesses stay in business. For that, we are inviting Marsh Insurance next month to come along and give another presentation to us. Nikki Pryor will be joining us, and Nikki's going to be talking to us about all things related to trade credit insurance. It can seem like a bit of a dark art in terms of how it works, what's covered, what's not, how you collect the money, what the gaps might be. But Nikki's going to come and shed a bit of light on that for us. Is there anything else that anybody would like to know in the last minutes of wrap up? No, we're going to let Brad off.
Thanks, everyone.
All right, Brad, we really appreciate you joining us today. And if anybody would like some more information, there are our contact details.
No, thanks, Ange, for the invite. And yeah, awesome to share our virtual lunch together.
Thanks, Brad. Thanks, Angela. Thanks, everyone.
Fabulous. All right, have a great afternoon, everybody.
Thanks, everyone.
Cheers.
Bye now.
Bye.
Bye.
Thanks, everyone.